I'm just putting us on the live.
Oh, okay. I was like, what does that pop up?
Yeah.
Now you got me all messed up. I don't even know what I was talking about. No, I had a client recently who said, I went to a lender and I was denied and I was not giving a solution. So you have people who are in desperation. They want to know how to fix the issue. And they're either being told by a professional, hey, do this, and it's the wrong information because they got information off of social media that they're telling their clients, or B, they're getting no information. And so they're feeling very lost and confused and frustrated that there's no help out there. And so again, part of the mission of Credit Score Pro is to be able to provide this to those consumers out there who are searching, who want to know, they want to help their credit. And maybe they also don't have the financial ability to pay hundreds and hundreds of dollars to a credit professional to improve that situation. But they want to go somewhere with it. And so this gives them the ability to do that at a very low to no cost solution.
Well, that's good to know. So at the my last home, I should say, on the mortgage side, I was working with a credit union, Northwest Federal Credit Union out of Herndon, Virginia. And when we declined someone for a mortgage, we would say, here's a link for, what was it name? Green Tree, or I can't even remember.
Yes.
And we just send them there, and who knows what happened after that. I just recently moved to Homeside Financial, which is owned by Lower. So if you've ever heard of Lower or Homeside Financial, now it's up to us to, I think, a little more hand holding and direct the client, right, borrower, to a fix, something like you're offering. So now it's even, so the last time I talked to Ivory was probably, oh my gosh, it was probably 3, 4, 5 months ago when I was still at my last employer. Yeah. Mm-hmm. So now I think it is even more of a reason to work side by side with these folks and really try to get my arms around, what are you offering? How much is it? How is it going to help the client? How much do they need to be involved? So on and so on and so on. Especially if they need to, if they're right on the cusp when they can repair or fix, which allows them to go from just under getting approved to getting approved. It's going to be important. Yeah.
Or getting that better interest rate, right?
Or getting a better interest rate. Absolutely. Yeah, Allie, that's right. Yeah.
One thing I want to point out that you said that was really interesting to me, and this is another, I think, issue in our industry. There was a girl that called me the other day. She works for an organization. She's actually the HR benefit manager, and she had some credit issues. So she went down through her HR benefits. Okay. And it directed her to a place like Greenleaf, which is a debt consolidation. Yeah, it's a debt consolidation company. Mm-hmm. So directed her to that. She's like, well, I don't need debt consolidation. So then she searched down and she found another one that sent her to a financial advisor. She goes, well, I'm not ready for a financial advisor. She needed credit repair, right? She needed that middle ground. Right. So not the debt consolidation. Right. But I do know a lot of banks, their referral is straight to a debt consolidation company, which they're not experts in how to improve credit. They're experts in how to negotiate and settle debt, right? And so I think that that's a big gap in our industry, is people are going to the wrong places and not getting the help that they actually need.
And
well, let me also add, I'm sorry, Ivory.
No, go ahead.
Let me also add is that the reason they may have come to us is for debt consolidation. So they might say, hey, Brian, we know that you are at a credit union and you do home equity loans. Mm-hmm. I'm looking to take $50,000 of credit card debt, and at whatever percentage it is now, insane double digit, and go and get an equity loan at 6-7%, and then of course restructure that debt. Okay, well, I understand that. And so if we decline them, now I understand why maybe they sent them to Greenleaf, because now it's a debt consolidation at a totally different level. And,
yeah. But and you're probably right. But I do know that a lot of credit unions specifically, they have a relationship with the debt consolidation company. The debt consolidation company makes them believe that they're going to do credit repair, but debt consolidation companies don't. So they do a little like education piece. You know what I mean? Sure. Yeah. So I think that, some of it's just they don't realize who they're sending them to exactly.
But I think most consumers also don't understand the difference between debt settlement and debt consolidation. And often debt settlement is the term is debt consolidation is used synonymous with debt settlement. And that's dangerous for the consumer because they think they're getting a loan and paying off all their debt. They don't realize that they're negotiating their debt, settling for less and damaging their credit. And then, 4 6 months later, they realize their credit's now destroyed and it didn't accomplish anything that they were hoping for. And now getting a home equity loan or getting a mortgage is even further in their future than they thought. So I think that's one of the dangerous things we're definitely starting to see more of right now, because consumer debt is so much higher.
Debt settlement really hits the credit rating very much, or a little, or
it's a lot. So it would be when they're settling for less, essentially, the accounts are typically charged off before that settlement takes place. But a settlement or a charge off, I mean, they're both extremely derogatory for the credit score. So it's very damaging, I guess. Everyone's credit profile is a little bit different, but it's a big hole to dig out of, and it can be quite difficult to fight negative information on a credit report right after debt settlement, because in order to get negative information removed, it has to have some sort of error, right? It has to have some sort of compliance issue. And the newer it is, the less time that has passed, the harder it's, yes, exactly.
Yeah. I gotcha. I would state, like, with a debt consolidation company, for instance, you have the ones that are giving you a loan that you then can consolidate your debt. That's different. But if we're doing what most debt consolidation companies are, is a nonprofit organization who negotiates debt settlements. And what they do is you come to them, and maybe you've never missed a payment on your credit cards or your loans or whatever right now at all. They're going to tell you to stop paying them. They're going to become your power of attorney. And then once the debt charges off, usually now it's taking 6 months to charge off. Now the negotiation can start to happen. Meanwhile, you're paying a monthly payment to the debt consolidation company. They're storing in escrow minus their fee for storing it and managing stuff. And then they're going to start to settle your debt. It could take you're usually in that program 3 years to 5 years. But with no protection. So it's very much like the example I like to give people is a debt consolidation is very much like a Chapter 13 bankruptcy without the government protection, right? The nice thing about Chapter 13 bankruptcy, you go in it stops, all the reporting gets stopped, right? So no more reporting. Where in a debt consolidation, you're late. And then if it then goes into becoming a judgment, the debt consolidation company calls you up and says, hey, we just got notification that Capital One went to judgment, so we have to pull that one out of the program. You'll have to handle that one on your own. So they created the issue, but then we'll help you with it once it gets to that point. So it could be a very traumatizing experience. There's a guy I talked to 2 weeks ago from Africa, and he went to a debt consolidation company, but he didn't understand what it was. So he really thought he was getting that consolidation loan. And now he's not made a payment in 3 months on any of his cards. It'll be another 3 months before they're charged off, before the negotiations are ever even going to be started. He was suggested by a mortgage company to go to them so that he can improve his credit score to get his family over here to the United States. He needed to buy a home to get them here. And I feel really bad for him because now we just made that time frame of him to be able to do that a lot longer.
Yeah.
The other aspect is also the price, right? They're being charged 20-25% for the debt settlement process. They just seem to keep increasing that percentage year after year, it seems. And some states have a cap, of course, but.
Yeah.
All right. Well, we could tell, these stories all night, but let's hear truly how you can help someone like myself in the mortgage business or whoever else is on the call that may or may not be in an industry that we need your help for our client.
You want to start, Allie?
Yeah, absolutely. So
I know you do.
Brian, I'm also an ex-loan officer. I don't think I brought that up in the beginning of this. So I'm actually a loan officer still. I just don't do loans anymore. I think it's been 10 years since I did them. I did them when they were fun.
Yeah.
But, when I recall back when I was a loan officer, one of the things that and part of the passion of where I'm at today is that, so Jerry's laughing too, is that I did not have a source to help my clients. So, and then back then loans were easier. You know, you had a 600 credit score, everyone's jumping up and down, we're going to make a loan happen. But if that loan was not possible to happen, oftentimes we didn't, you know, the loan officers didn't call that consumer back. Number one, we didn't have an answer for them. Number two, we had the next deal we had to work on, right? You know, and I think my thought when I was working in the industry, I was the manager. So I started seeing all these people be turned away and they're crying. They'd call, why didn't the loan officer call me back? Why didn't he tell me why I was denied? Blah, blah, blah. And I decided to start guinea pigging, I guess. I'm like, well, I'll see if I can help you. And I helped some people, hurt some people until I figured out this whole credit algorithm for the FICO 542. And so my point of saying that whole long story is that I needed that resource back then, even when it was easier, right? Well, now the industry is a lot harder. You know, if we want to get the best interest rates, we have to have a 760 credit score. Everything's so much different, so much harder for the consumer to have a good credit score and to get it qualified for a home loan, where in the past it wasn't. So if I needed it in the past, I think we really need it today, right? And so what our solution is we have this AI resource and tool that literally takes the credit report, analyzes it, and it finds all the negatives and all the errors. It's reading a raw data credit report, which just to kind of give you an idea, if you've not been on any of my lives, I kind of talk about this quite often because I think it's a valuable piece of information. But if we're looking at a mortgage credit report, for instance, it may be 10 pages long. Right. We are seeing what the vendor has decided to show us or what they believe is important for our industry to see. The raw data behind that is a bunch of code, and it's probably 500 pages long. There's a lot of rich data in that that's not shown on the credit report that we see. But part of that rich data is also errors. And so when Credit Score Pro reads that credit report and that raw data and it sees errors we don't even see with the human eye because we don't get privilege to that information. It sees those errors. It's able to use that information to do a dispute to get that negative trade line off the credit report. Okay.
Allie, what percentage of the time are you seeing errors? 99.9% of the time, there's some error.
Some error. Okay. Yeah. Yeah. And so the credit bureaus, the rule is they can't have errors. They simply can't, but they will. It's just too much data not to have an error, right? If you think about it, it's just a lot of data not to have an error. And we'll have errors across credit bureaus. Can you hear?
There we go. I accidentally muted myself on my microphone.
Oh, okay. So across, even across the credit bureaus, you have one credit bureau say one thing, another says another thing. You've probably seen it on your own credit reports. But it's analyzing that data, and then it's doing two things. It's looking at what errors can I find to dispute. And of course, there can't be errors. So the credit bureaus get that information. Their job is to either fix the error or remove the trade line entirely.
All right.
The other thing that Credit Score Pro is looking at, because it's AI, it's learning, it's saying, oh, I've disputed this before, and I've said X, Y, Z, and it removed it from the credit report. It worked before. Let me see if it works again. So it may be disputing based on error. It may be disputing based on its knowledge of what will be removed, how it would get removed from the credit report. So, and it's constantly learning. So when the credit bureaus start to change their tactics, so does Credit Score Pro, right? Which is really phenomenal. And in terms of like success rate, we're seeing about 23% of the negative items on a credit report removed from the first round dispute. So meaning when you create that AI dispute letter and submit that to the credit bureaus, 23% of the negative errors are typically removed in that first round. And then between 80 and 90 by the fourth round. Okay. And so when I say, go ahead.
Oh, I was gonna say, which is huge, because when we look at the credit repair industry as a whole, a great credit repair company, we're looking for the process to be about 6 months. Most credit repair companies, it is falling closer to a year.
Mm-hmm. Yeah. Yeah. I think that's important to note. We haven't found a credit repair company that can match the results that Credit Score Pro is getting, which makes obvious sense. No credit repair company is looking at a raw data credit report, finding all the errors. I mean, it's certainly not going to do it. Most credit repair companies don't even know if you said raw data credit report, they wouldn't be able to tell you what they're kind of like deer in the headlights. What is that? Right. So they don't even know that it exists, but then they're not going to read that to find those errors. Right. And so I think that's important to know. AI can read that within seconds, right? Computer analyzing that within seconds. So I think that's important.
Mhm.
Another really important aspect of Credit Score Pro, there's so many, but I'm going to give you as a loan officer what I see is that my client can select a goal and say my goal is to buy a house. It's going to analyze that credit report and spit out action steps of exactly what that person needs to do to prepare to buy that house. And then it'll also list like here's the top 3 things to do. So it's always looking at what's the easiest, fastest, best thing to do to improve the credit score. And then of course it also gives like every other thing that you could possibly do. So you have like this full range of things to do, but then you can cherry pick the top 3 things, easiest, fastest, best things to do. So that that client is really seeing and improving their credit score as they're using Credit Score Pro. Has the educational resources there for them so they can learn more about credit. And I think a lot of consumers today, the millennials in particular, they really want to know how credit works. They're confused by it, but they really want to know. So this gives them the ability to learn and understand it as well. So that's my take on it, Brian. What do you think?
Awesome. So, so they go to your site and if they become a member or whatever the case may be,
Mhm.
to get access to all this wonderful information. And then it is hands-on or there itself, it's done on your own, or a combination of the two where you help or not.
So
Is there
it
different
is
levels of membership, I guess, or different levels of service?
so it's just one level of service at this point. Perhaps in the future that may change, but at this point, when a consumer signs up, they have access to everything. So it's meant for somebody who has damage or doesn't have damage. It's meant for somebody who wants to learn about credit just as much as somebody who wants to repair their credit. It's very easy. So if somebody were to log in as a new user, it will have them set up their credit monitoring. We've partnered with Smart Credit. Once the credit monitoring set up, it's automatically going to import the credit report for that consumer. It's automatically going to read the credit report, analyze the report, and really the only aspect that the consumer has to choose when it comes to the dispute side is what accounts they want to dispute. So they just click the accounts. That's it. AI says this is how it should be disputed. The consumer clicks OK. And then from there, they can they're going to get an email with the dispute letters. They can print it and send them off to the bureaus themselves, or they can just click a button that's going to allow them to utilize a mail service to send it for them. So it's always best if they print it and mail it themselves, but the reality is most people want the most hands-off approach possible. So they're going to click the button and have it sent. Then it's automatically at 40 days later going to re-import the credit report, do a new analysis, and repeat the process accordingly. And then at the same time, they'll be following that credit action plan. And if they fail to choose the goal of, let's say, buy a house or pay down debt, get a car, whatever, then 3 days after the credit report has been imported or has been issued, it's automatically going to send them a general credit improvement plan. So then from there, if they're like, oh, I never did my credit goal, they can go back, pick a goal, and it'll make a new plan based specifically on that goal. So we really are trying to encourage the user to not just work on disputes, but learn here's how credit works and here's how I can have the strongest score possible. And then of course the learning is all on them. If they want to learn, it's available.
They got to dive in and dig in.
Yeah.
Okay. And so if I'm going to share this information with some of my future clients that need your help or the help of Credit Score Pro,
Mhm.
what can I tell them? It might run them on a whatever, monthly, weekly, quarterly, annual basis, and it probably will need it for minimum a year or so. If there's some deep repair or if it's just a couple of things, maybe they can get it done sooner.
So we have users that maintain the service long term because they want the ongoing monitoring. Because here's the beauty is they're only paying for the credit monitoring. So the AI is actually free. So all they're doing is paying to access the smart credit monitoring. So most people choose to keep it active because you do want some sort of monitoring, right? And then if something pops on the credit report, well, now you have Credit Score Pro saying, hey, we noticed this new 30-day late marker. Hey, we noticed, that you should pay this credit card down, or this credit card hasn't been used in 3 months and now it's not factoring into your score anymore. So it's not helping you. make a payment or make a charge, not a payment, make a charge on that card. So $39.99 a month is how much the credit monitoring costs for the consumer, and that will give them individual reports for all three credit bureaus. So one for Equifax, one for Experian, and one for TransUnion. So it's not going to be a tri-merge report like what you see on the lending space. It will be individual reports for all three.
Right.
So
Okay.
yeah.
So
And they
free.
can run the report just like, I guess they changed the rules where get myfreecreditreport.com, whatever. You used to be able to do it once a year. Now my understanding is you can do it weekly. And that changed after COVID or during COVID, was my understanding.
It did change. It did change to where you could access it weekly. However, when you're getting your free report, you're not getting your scores. So just to clarify, so Smart Credit is set up to give you a full report and scores once a month.
Okay, got it. Thank you.
Yeah. So it'll be once a month in their Smart Credit monitoring, though. They have a couple other resources. One is where they can go daily and do a daily update on their TransUnion credit score and report. So they literally can update that daily. They get something called Privacy Master, which allows them to get their information off of the dark web and other websites that their information is being sold on, which if you have not seen this for yourself, I encourage you to get on a system like Smart Credit and look at this of how many websites are selling your information. Yeah. And this is a real problem for the identity theft issue. Yeah. But you can go in on Smart Credit and actually take action to get your information removed from those sites. And it scans and analyzes that. I think it's every 14 days to, show you if there's been any new sites selling your information and including the dark web. And I don't know a lot about the dark web, but I know enough that everyone's scared of it. So I don't want my information on it. And then they also provide a $1 million insurance policy against identity theft. Mm-hmm. Amongst that, there's just all kinds of other resources that Smart Credit gives. So it's almost like, you're paying for this resource that you don't want to leave. And then on top of that, you get Credit Score Pro for free. One of my favorite resources that Smart Credit has is it'll tell you what date to pay your credit card payments by to give the biggest impact on your credit score, which I think
I was going to tell you to talk about that because that's everyone's favorite. Because how many times have you had a client say, well, what's the best day I should pay? Well, now you'll know.
Yeah. And they actually get an email that says, hey, you have a credit card, balance. You should make the payment on this date, which is really valuable because, when we're looking at a credit report, I'll give you an example. So if I have a client that says, hey, Allie, you just pulled my credit score is lower because you're showing that I have a balance on my Fifth Third credit card of $500, but I only owe $100. And of course, that could be a major difference in credit score. But my answer to them is, it could take up to 30 days for Fifth Third to update that and show us the new payment to get that new score, where Smart Credit actually gives them the date that they pay it, that their next report would reflect that. So I just think that that's really nice because people get confused. They think if they pay something tomorrow, it shows up on the credit report, right? Or 5 minutes later, it should show up on the credit report with this new balance. And so that confuses people oftentimes.
Unfortunately, the days are gone where you can call the credit card company and ask them to lower your rate a couple of points or whatever the case may be, and they would do that. And now they're like, take a hike. We don't lower rates. I'm like, when did that start happening? I don't use my credit cards a lot, so it was funny that I found that out when I called them because I used to pay close to nothing on the rates, but now they're crazy through the roof.
Yeah.
Yeah.
Well, I used to think 29.99 was a high interest rate, but now my clients are showing me interest rates at 34.99%.
Yeah, we're seeing some in the 40s very recently, like within the last week, unfortunately. And a lot of the starting rates now are at the low end, the 29.99.
Insane.
You have to be careful calling them because if you call them and ask them for, I have some clients of, oh, should I call them and ask them for a credit line increase or to decrease my interest rate? I'm like, no, because when you do that, then they're going to ask you if it's okay to look at your credit. And if they look at your credit and it's lower than what they approved you for before, they could actually go the opposite way with you and say, oh, well, actually, we're going to decrease your credit line, or we're going to decrease
Crazy.
your credit. Yeah.
Yeah. So let me ask you though. Let's say you do some really good credit repair. 6 months to a year goes by. The credit company, you want them to know that you bumped up your credit score 100 points. Then I would assume it's a good idea to call them to let them know, or they'll see it anyway, and their software AI will pick up the fact. But they don't want to lower the rate. They're making all this money, unless you call them to tell them.
They're doing soft pulls every so often. Each credit card company has their own timeline to which they do them, but they will proactively give credit limit increases. I mean, if you think about it from their perspective, they want to make sure people are using the credit cards, because if they're using the credit cards, then they're carrying a balance and they're paying them interest. So they'll proactively do credit limit increases.
I think they proactively do it both ways, right? They're constantly looking to have a default clause that says if you default on one account, then we can take that default clause in effect, and then all their interest rates go up and blah blah blah. So I think they do it both ways. They're proactive on helping improve your situation, as well as the other way if it serves them, however which way it serves them, I would say.
All right, I'll shut up now. Thank you.
Oh, it's good conversation. So it's perfectly fine, especially since we're in a small group today. Jerry or Tina, did either of you have any thoughts, questions, scenarios that you've come across lately? If not, I can always pull the questions we had submitted from those that weren't able to attend.
I think that would be a great idea. I think we can, it's probably many questions that we have that we just don't even realize we have sometimes, I think.
Sure. Okay, let's start off with, let me see if maybe I should throw you a little bit of a softball. I'm going to throw you a softball to start with. I'll interview you, Allie.
Okay. She loves doing this to me.
How does removing or adding an authorized user affect credit scores?
Oh, this is a good one. So removing or adding an authorized user. There are times where adding an authorized user can help improve the credit score, especially if you have someone that you're adding on authorized user and there's longevity there. That can help improve the score, especially if they have obviously no late payments, their balance to their credit limit is low. Those can help boost up the credit score. I am really cautious when I talk to people who are looking to get a home loan by adding authorized users, because in my experience that the underwriter could say, hey, show me who's paying this, who are you on this card with? And they find the client's not actually paying it, then they could require it to be removed. So I'm really cautious with people about relying on authorized users to help them buy a home, but it certainly could help with buying a car and everything else, because they don't check that. It's the lending industry that checks that. But on the flip side, authorized users can hurt your credit if the party who's responsible for it has a late payment, or their balance is really high. And a lot of people don't understand that. They think they're getting history and they want to add that onto the credit report, but then they end up hurting them because the credit limits or their balance is so high to the credit limit. And that's kind of a hard conversation to have with people, that might need to be removed. It is one of the things that Credit Score Pro will look at, is if there is authorized user accounts, are they good? Are they helping the consumer, or do they need to be removed? And it'll give that recommendation. But authorized users could be a great thing. And the one problem that I have seen, this is an Equifax issue, and Ivory, I don't know if you've seen this issue too, but let's say you're an authorized user on an account and the responsible party goes 30 days late. Well, in the past, it was a really easy thing. You just call, I want to be removed from an authorized user. It's off your credit report, no harm, no foul. Equifax has decided that they are going to keep the history on from the date before you removed yourself as an authorized user. And so we are having some issues with getting those off sometimes, because they have made that stance. But in legal terms, you're not legally responsible, so you shouldn't have any negative feedback from that. But I know Equifax is making it a little bit harder to get those off of there. So just, be careful when you're deciding who you're going to be an authorized user on with, and monitor that yourself.
And you can fix it with Equifax. It's not to say you can't, it's just
Right.
not made easy. The other
Right.
thing to consider, or I guess not consider, but some creditors are starting to catch on that people are becoming authorized users specifically for helping their credit. So we have seen certain creditors now change their policy to where they're not adding the account onto the authorized user's credit report at all, or they're only adding history based on the date that they became an authorized user. So that's something to watch out for. I know specifically Wells Fargo and some American Express, I've noticed that with. So
Yeah, very true. I see that a lot, especially if they can figure out that the two people don't live together. If there's an address that's similar, like husband and wife, it seems to work pretty well. But if you don't have the same address, they can red flag that, I think is what they're doing.
and
But yeah, I
really
see that a lot now.
to piggyback, it really should be a family member or a spouse, because otherwise I think I'm wondering, I don't know, Allie, but I'm wondering if some of that is concerns over trade line usage, buying trade lines and etc.
Yeah. Oh, I think that's where it came from. Yeah. I
Yeah.
mean, I think there's lots of different aspects of why where we're at today. But I mean, I remember when I first started in the credit repair industry, that was my golden ticket. Get on grandma's car credit
I
card,
know.
right?
Right.
It just doesn't work anymore, you know. So
One with the newer versions of the FICO algorithm, we're seeing a lesser impact coming from authorized accounts. And with the newest
mhm,
algorithm that's not used, they're not factoring into score. So
mhm. Yeah, that's exactly true.
not widely used at this point yet. So,
Mhm.
okay, let's see. Ooh, here's a fun one that someone submitted. I should have wrote the names on here. Well, maybe, I don't know. Maybe I shouldn't put people's names out there. Okay. Can a borrower remove a collection if they actually owe it? And how can they have, we'll just leave it at that. The rest I'm not quite understanding. So can a borrower remove a collection if they actually owe it? Question mark.
Yes. So a couple of things on how that can happen is with Credit Score Pro, again, it's looking at that raw data credit report, it's looking for errors. So even if they may actually owe it, if there's errors, the errors can't be there. So regardless if you owe that debt or not, if it's not reporting accurately, shame on them. They have to
Mhm.
report it accurately. And if they don't, they either have to repair that, correct the errors, or remove it from the credit report. So yes, oftentimes something that you do truly owe could be removed because of errors. Absolutely. It can be added back on if errors are corrected though. So that needs to be stressed there too. The other
Yeah.
way that you can get something off that you truly owe is there are certain creditors that if you settle and pay, they will remove it. Certain collection companies do.
Mhm.
So that could be an option as well. And Credit Score Pro helps you understand if that's an event that might be helpful for you. But most often, we're looking for errors for removal.
I think another important factor to remember for the general consumer as well is if you do have a collection removed from your credit report because of a credit reporting error, that does not necessarily mean you no longer owe that debt. There's big differences between having that debt be invalidated or no longer owed by you because of some other reason. We're just going to leave it really broad like that.
Mhm.
Versus having an error on your credit report that removes it from your credit report. And that's true for charge-offs as well, right? Things that are still with the
Mhm.
original creditor. And I think that's often overlooked. Oops, Tina's trying to get back in.
And I'm gonna just elaborate on that, Ivory. I cannot tell you how many people think that if it's off their credit report, and we're not talking about, let's say it got deleted from the credit report because of errors, or let's say it got deleted because of age, right? That does not mean that you don't owe that debt. And that, depending on the statutes and limitations, the creditor could come after you for a judgment and garnish your
Mhm.
wages. And I've seen it so many times, and people are like, "Oh, I thought that was gone, and I didn't owe it. If it's not on my credit report, I don't owe it." That's not true. That's not true. So that's important to know.
Okay, let's see. Do we have another question? And there's a whole path we can go down with collections. I don't know when it is, but I know we have a webinar coming up later about collections, just because there's so much we can talk about and so much
Mm,
knowledge people don't have and we want to make sure understand.
Hint, hint. I'm not going to give you any of the sauce because I want to see you guys at my next live, but there are different types of collections that work differently on your credit report. There are some that get removed, some that don't. Different rules for different collections. So you have to see that live to learn about those, but it's really powerful conversation, especially if you're in the lending space and you want to advise as a trusted advisor to your clients. It's important that you know these types of things.
I think we just have time for one more question because we're actually did a good job getting through things today. Okay, let's see.
Pick a good one.
I'm going through them. I've got a giant list here.
I know, I saw it. But you
Um,
didn't let me read all of them so I could be ready. So
no, I
just,
didn't.
just want to catch me.
Sometimes it's hard to understand what they mean exactly. I don't want to give you one that's too hard.
Too hard. There's no such thing.
Hmm.
Well, while you're looking for that most perfect question to end our
I
webinar
know I'm
on,
trying to find a good one.
I want to make sure you guys know that we are here every week on Thursdays. We are going to change it up from being on Eventbrite to being on a Zoom link, so it'll be a little bit easier to navigate. Thank you, Ivory, for changing that up for us. Just so you guys know, anyone who's having trouble with the event link, I also do. And Ivory thought that it was my fault. So, Brian, thank you for reassuring Ivory that it's not just my fault. But we do want you to know that you can get to Credit Score Pro to learn more about it at creditscorepro.ai. Again, that's AI, not .com. So creditscorepro.ai. We also have a Facebook group on Facebook. And Ivory, can you say the name of our Facebook group so people can find
Yeah,
us?
it's Credit Score Pro, the AI credit revolution.
And of
So
course, you can find that at Credit Score Pro's Facebook page, but there's a private group. We do encourage, especially professionals, to get on there because although we monitor it to answer questions that consumers have, it is a really great space for professionals to also provide that professional advice on how lending works or how real estate works and things like that. So your help in that group would be much appreciated.
I did just have to turn on post approvals because we were getting some spam in there. So just a heads up, we'll approve your post as quickly as we can. Okay. The last question. There's several that were submitted asking about late payments showing up on the credit report during a mortgage forbearance. So I'm guessing forbearance is during COVID.
Yeah.
Do you want to talk a little bit about, I mean, I'm happy to talk about it too, Allie, but if you want to talk a little bit about the late marks showing up on mortgage forbearances.
Okay, I think there's, let me make sure I'm getting this right because there's a lot of different things. So had a client, she was in a loan modification, mortgage forbearance, if you will. She had lates prior to the approval of it. Then her late stopped. And then when the forbearance was over, she's again late. They didn't understand that process. They thought that the lates from before the agreement were not going to be on the credit report. I also had one recently where he went into a loan modification. He was late. The actual modification stated that they would be reporting late throughout the modification because he was not making full payments. So they sent me that contract, highlighted it, and it certainly said that. And, he has those lates on there. But Credit Score Pro is phenomenal at getting those lates off of there. I had a person recently who had a foreclosure on his credit report, and Credit Score Pro is actually able to get that off his credit report. This guy, I talked about this, and I think in the last live, like he literally called me crying because it came off, and he said, "I feel like a legitimate person now," which is an amazing, thing to hear someone say because obviously we're all legitimate regardless of what our credit score is, but people really, we're seen in the light of our credit score. And so when something like that negative that comes off the credit report, it's a really good feeling for people, and it opens the doors to things that they weren't able to do before. And I think we oftentimes forget the emotional aspect that credit really has on people, and how having good credit, if we look at two people, one with lower credit scores and one with really good credit scores, a person with good credit scores can really advance their life, their livelihood. They can buy a home, sell, invest, da 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 da. And a person who doesn't have that and doesn't have the financial means to do those investments and doesn't have a credit score can't advance like someone who does have a high credit score. So I think we just oftentimes forget how very important credit is in this day and age. And I'm hoping that Credit Score Pro can help change and help give some enlightenment to people, help improve their life and their situation. And that's really our mission.
Yeah. I'll add a little bit, but I'm going back to the forbearances. It's really important when any consumer is getting documentation for any sort of assistance option. So we've got deferments, forbearance, modifications, that they read through the documentation, because if it's not a government sponsored program, which is the program is set, it's going to be the same at every single institution, then one lender can do the program this way, another lender can do the program this way. So there are some scenarios where if you were past due before the forbearance started, you remain past due during the duration of that forbearance. So you were 120 days past due, you're going to be, and you get a 1 year forbearance, you got a year of payments that are going to be marked as 120 days past due. Other lenders say you will show current during the forbearance, right? So there are specific rules with things like trial periods when it comes to modifications that are uniform across the board. But basic rule of thumb, if you don't feel like you can read that paperwork and digest it and understand it, I actually do recommend having an attorney review it. When we're talking about something like a mortgage, and my old world is dealing with default and mortgages and all the modification, foreclosure, deed in lieu, all that process, I always recommend it's worth spending a little bit of money to have the attorney review it and work directly with the mortgage company, because it may save your home, but it also can save your credit too. So
Agreed.
my last thought is just with the CARES Act, there is a slight bit of complexity there. CARES Act did dictate that if you got some sort of assistance that brought you current, it should rectify the negative information on the credit report. But like, how do I say this better? So Allie, I'm trying to mention like 30, 60, 90. If you got brought current from a modification at the 90-day mark, that late mark should be removed from the report. So there's conflict between the loan modification documents or the loan forbearance documents, and then with the CARES Act dictates. So there is still some kind of argument that goes back and forth there between people like Allie and I, and then the creditors. So little insight.
Yeah.
So I suppose that's it for today. Let's see what next week is about. What do we have scheduled for next week's event? Okay, so next week is the 22nd, and our event is aimed towards consumers. So if you have clients that you think may benefit, it is 5 pro tips for rapid credit repair. So really, we're going to go into 5 items, but really break it down and make sure that consumers understand the why behind the recommendations. And then after that, we have a lending professional version of that same type of event. That's really going to be aimed across what we're seeing as common scenarios faced now. So,
yeah. And keep in mind, you guys as a lender, you are welcome to come to the consumer ones as well. If it's, your schedule suits you better that way, feel free to do that. Your insight is always going to be valuable.
Awesome. Thank you, ladies, very much.
Yeah, of course.
Thank you, Brian. It's nice to meet you.
Pleasure.
Bye.
Yeah. Thank you again. Bye.
Absolutely.
Thank
Bye.
you, Tina. Have a great day. Thank you, Jerry. Have a great day.